Hello everybody, today I'm going to be talking about the top 13 technical analysis charts that I believe every fundamental investor as well as trader should know. Spoiler, this is a basic course, so if you're more experienced you might not find this useful, but you never know, there might be a nice little refresher. So let's get started. So first off, we're talking about a trading range. This is where a stock is trading in between two main price points. Resistance level is the price where there's more sellers than there are buyers. So it's hitting this upper price movement and it's hitting this massive selling, thus causing the stock to move down. Now, support level is the complete opposite. It's the level where you have more buyers than sellers. So as the stock price goes down and hits this main level, buyers step in to jack up the price. And usually this is these two form points where the stock is trading between. Then it's going to be leading into our next two slides, which our next one is upward price trend. Is definitely a bullish pattern and is formed when you have this price movement that is going up, hitting resistance and testing support. But it forms when you have three ascending bottoms. So when you have three ascending bottoms, if you notice, each bottom is higher than the other. So each of these, let's say, is a support level, and the support level is getting higher, so it's not testing that lowest support level. So once you see these three ascending bottoms and they're at higher highs, most likely you have an uptrend that's formed and the stock is going to keep going up. Now, downward price trend is formed when you have four descending tops. Now, it's the complete opposite of upward trend. You want to be bearish or short the stock. So as you're having these movements up and down, you have the price movement that is continuing to go up, but they're making lower highs, right? You see them? And once you see these four descending tops, it's a good indication that from here on out, you have a downward price trend, which of course, over here, you can change and could come back to an uptrend, which we'll talk about later. Double top. Double top is where you have an uptrend established and it makes the very first top, so you have one key core resistance level up here, pulls back and then tries to make another run at it, right? But it doesn't quite make it. So it gets stuck at that same level and fails, so a breakout cannot continue, and then a downward trend is established. So usually when you see a double top, it's a good indicator what goes up must come down, and you can get short the stock. Rounding top. You have an uptrend that's established, and then you have a phase a consolidation phase where it almost trades and it's a flat line. This is called the distribution curve up here. And this could last for a while, but the price is not really moving. It's stuck in a certain trading range. And of course, after a while, if it couldn't break out and couldn't break down, usually it starts moving down and it breaks this support level it has in this distribution phase. Usually a downtrend is going to form and you can short the stock there. Head and shoulders is probably the most easy pattern for traders to spot out, in my opinion. First, you have an uptrend that is established, hits some key resistance, hits a certain support, then it makes a higher high run at a different resistance level, but fails and pulls back, but it keeps hitting this support that it hit by this left shoulder. And then it goes to the same resistance as it went to this left shoulder, which forms the right shoulder. So if it could not break this resistance here to test this resistance up here, usually you're going to have a downtrend form, and you establish this, then you could get short the stock here. Of course, if you hit this level, you could have, long the stock. But usually, if you didn't have a breakout here and you were short and you got to this point and it started to move against you, you should know that you might have a right shoulder forming and you probably want to cover your short depending on where you got in over here. Inverted head and shoulders is the complete opposite. It's like it is. It's like it sounds. It's an inverted head and shoulders. So you're hitting these support levels. This first support, couldn't quite make it, and you hit a lower support level down here. Now you get to this part of the shoulder that's the same as this shoulder, and basically you hit those support levels, and you can know that if you see something similar here, you're going to have a breakout trend over here, and you should be bullish the stock. So the worst is probably over for this stock, and upward momentum is going to continue for it. So a symmetrical triangle, it's where two trends converge in one central point, this apex here. Usually all symmetrical triangles end up being breakout patterns, but once you form this, you can find out that this price right here is what you're going to watch to see if you're going to have a breakout or a breakdown. Ascending triangle, you have your main resistance level up here, and you have your uptrend formed. Now you're looking at this point also to see if your breakout is gonna continue or it can break down, but usually ascending triangles, you're gonna go up to the upside. It's a bullish pattern. Descending triangle is the complete opposite. You have two trend lines established, the support level, you have your downtrend formed, and this is usually a continuation pattern, and you have this apex here, and you're going to watch out if it can get to this price and continue downtrend, or there will be a trend reversal, which if there's a trend reversal, you would want to cover your short. Parabolic curve. This is where you have a certain range established, and then maybe you have some news coming out or some new product, or they're making a lot of money, and it just goes parabolic. It's just like it sounds. A good example of this would be Nvidia stock. If you look at it, it's a parabolic curve with their AI development. Also, pharmaceutical stocks come out with phase 2 data, phase 3 data, and it could take off during the day. But usually parabolic curves are short-lived. When you see it like this, what goes up must come down. And if it happens intraday, usually it's going to pull back by the end of the day somewhat, or during the week. And if you have something that's forming over months, it's going to take more time. But of course, you got to be careful with these, just because this is some crazy movement up. Erratic volatility, I put in here. It's not really important. It's just you can't really form a pattern, and it's a bunch of nothing where you can't recognize anything. So there is such a thing in charts where you don't have anything. Flatline, the most boring thing to ever trade in my life. So you're stuck between a very small range, and you're not really moving, and it is not fun to play, and that's what a flatline formation is. Falling knife, I put this in here because a lot of traders ask, and a lot of investors ask what a falling knife is, and you might have heard it, never catch a falling knife. A good example of this is like Lehman Brothers chart I put up here. Falling knife is where you have a downtrend stock, but at the time you're looking for the trend reversal, right? And you look at this good company, you're like, oh, there's no way it could fail and stuff like that. And usually as this is moving down, it's breaking support level after support level and support level, and you keep going in and trying to buy at these support levels, and that's just like it says, it's a falling knife, and eventually you're going to get cut and you're going to bleed to death, right? Because it went under, as we all know. So you got to be careful, because charting is not always like a perfect thing. It's just you're seeing these patterns, and you can judge and make better informed decisions for your trades. If you see a pattern, usually you're going to have, we trade in a computer algo driven system, and usually these computers are going to recognize these patterns. They're going to be jumping in, jumping out, of course at crazy levels, but usually when you can see these patterns, it's a good indicator that there's a lot of traders that use these patterns, so you can mooch off them. But to understand these basic patterns and to pick them out on a daily basis is key for success. So, got any questions, please email me at wallacestreetinvestment@gmail.com. I appreciate it, and hopefully you found this informative and helpful, and join my channel. I'm going to be doing more videos in the future for daily market news reports and some technical analysis breakdowns of certain stocks in the coming future. So thanks. Have a good one.